It used to probably cost hours or days to complete such task in a large fund, but now we are turning that into seconds.
Welcome to the Fund AI Pod. In recent episodes, I've been interviewing guests that have been existing firms that have incorporated AI into their existing technologies and workflows. So in today's episode, I'm excited to share that I have a guest that started an AI native FinTech focused in the investment management space. So with that, welcome to the podcast, William Wu.
Hey, Ian. Hey, everyone.
So William, why don't we kick off with you telling the audience about your career to date?
Sure. Yeah. Well, first of all, Ian, thank you very much for reaching out and reconnecting. Looking back, I've actually played in every side of the table in the hedge fund industry. I've been an allocator, a service provider at NT, and a portfolio manager and a risk manager at a hedge fund. Now I'm an AI innovator for hedge fund. So I started my career in Chicago in a boutique fund hedge fund after I finished my PhD at Northwestern. That's basically where it gave me the first exposure to the industry, understanding how hedge fund works, how to select manager, how to differentiate, skill and the luck, finding the best manager. And then I joined, Northern Trust after they acquired Citadel Solutions. So we're basically leveraging that platform, providing mid office, front office supports for large names in the industry. And after that, after NT, I actually joined a multi-strat hedge fund in Boston, where I'm running a multi-billion-dollar central risk book. So that gives me the kind of like a hands-on and front row experience within a fund and seeing how things really works there, and connecting all those dots, having this 360 perspective of the industry, and ultimately now leading me to where I am today, building Menos AI, helping the next revolution in this industry with AI.
So why don't we start with briefly, what is Menos AI? What's the core product? What are the services? And who are your primary clients?
We are developing AI platform, AI agents dedicated to the fund industry, basically institutional investors, hedge fund managers, and asset managers in general. What we do here, in short, I joke with my friend, is we are basically turning the buzzwords of AI into operational edge for hedge funds. How we're doing that? By basically scaling what fund managers love to do, which is investing, and automating what they hated to do, right? That they have to do things like, hey, compliance, reporting, or cleaning data, all that stuff. So that's basically the platform. We partner with hedge funds, helping them building their AI solution, leveraging our red labeled AI platform.
Walk us through then, since you've come from both the buy side and the sell side, you've been on hedge funds, asset management, and now you're leading in AI FinTech. What has been the adoption curve in AI in the investment management to date? And over time, has the priorities of that changed as the evolution of the technology and the use cases evolve?
Yeah, this is actually a fascinating question, and it has changed so much, the adoption curve in such a short time, and it's almost like a roller coaster experience. So if you imagine, remember back in, let's say, ChatGPT was released in November of 2023, end of that year, and in early 2024, most firms was, I think, the adoption was more like, about, safety guardrail. The concerns were really about, hey, our employees are using ChatGPT, they're training language models within data. Is our employee uploading sensitive information, leaking IP to the large language model? There was a lot of concerns around that. So the focus is more on guardrails and building governance rather than, hey, how do we adopt new tools like ChatGPT? So that was, I think, 2024. A lot of skepticism and a lot of kind of wandering around. And early 2025 was really interesting. I was in a industry conference where it's full room of a CTO, CEO, COO of asset management firms. And I think after 1 year of the AI rally, you can clearly see the tide has changed. The consensus was built. It was like everybody, they know AI is something coming. Every firm was like, hey, adopting AI or integrating AI into our investment workflow is the top priority or initiative in our firm. Funny enough, it was not that much of a clarity. So people doesn't know what's the use case, how to really deploy anything. So I was joking with my friends the other day. It feels like the meme joke was like, hey, who we are? We're CEOs. What do we want? AI. And when do we want it? Now. What do we need it for? We don't know. So that was early this year. And throughout the year, I think, again, hedge fund and fund management is a group of really talented, smart people. People learn and understand that, really adopt it really quick. So now by the end of 2025, I was actually in London last month. Now it's completely different now. Again, the consensus is clear. It's not a buzzword anymore. People wanted adoption. Now it has moved from like, hey, just adopting ChatGPT, but now it's more like a weaponize what AI or generative AI is really capable of, and what it can do integrated into workflow. So there's a lot of dispersion, but use analogy, it feels like throughout this year, early the year, you hear the twin is coming, you hear the sound, right? End of the year, everybody see the twin coming into the platform on the track. Some people are wondering, some people already onboarded and moved forward, but no one wants to be left on the platform. I think that's where we are about hedge fund and fund industry in this AI revolution.
Interesting insights there. And then tell me, what would you say is the biggest misconception about AI in the funds management industry?
Yeah, well, there's a lot. So again, I've spoke to many practitioners, people in the industry, but I think the biggest misconception is that AI has to be like the magic wand to generate alpha to be helpful. So you probably heard Mr. 𝐏𝐿-𝐿 mention that, hey, we think AI definitely can help with enhance the efficiency, but it just falls short when generating alpha. And his argument is actually clear, like, hey, AI, it's basically built on all the knowledge people already know. It doesn't know what it doesn't know, so no alpha. I think where the boundary for AI is, if human beings can do it, then what AI can do is amplify and scale it up. If human today cannot do it, it's going to be really hard to force AI to do it. What I want to circle back is I think efficiency itself is alpha. Just think about a keyboard, right? Keyboard doesn't generate alpha, but imagine a trading day without the keyboard. So I think that's where we are. AI is becoming infrastructure, the efficient infrastructure. So definitely, if we're using AI right, it will scale up someone's capability of generating alpha.
You've worked at both the buy side, so working for hedge funds, and also the sell side. At Northern Trust, you serviced hedge funds. So you got, as you said, both sides of the coin, 360 view of the hedge fund world. How did that perspective shape your founding of Menos AI?
Yeah, well, so first of all, again, love that Northern Trust. It's great places where I learned a lot. As I was a head of a quant, and that experience actually, I think, gave me the DNA of how hedge funds, and funding industry generally works. Understanding how trade flows, how risk is monitored, and how compliance works, how alpha generation process works, how research is done, the trade ideas generated. That is incredibly important, because what I found is you probably heard a lot of this type of discussion. In today, it's really important to develop a vertical industry application. So why this is very important? Because I'm here in Silicon Valley. We're seeing a brand new breakthrough technology, which is large language model. Often cases you will see innovators or people basically they have a hammer in the head. They have a hammer in the hand, and what they're looking for problem to solve. And oftentimes it's falls into fancy kind of prototypes or fancy use cases, but not really solving the problem. It's harder for people out of the industry to know what really happens and what's the real problem. Having that experience as I mentioned, investor, operator, and a service provider from the industry, I know where all that problems are, and I've been cultured and experienced living through all those problems. I know where the nails are, so now I have the hammer. I can go fix them. Trade reconciliation, pre-traded post-trade compliance, research information overloading, scattered, data. Now we have the AI tool to really solve that problem one by one. I think that's the advantage. My experience in the industry really helps me helping our clients really solve their problem.
Could we perhaps double click into that in terms of, you mentioned operational challenges that AI could solve and research support as well through AI. So what would be some use cases that AI could help solve in those areas?
Yeah, there's a lot actually. So compliance, cannot be be more, it's not going anywhere, right? So I actually met with former SEC chairman Gary Gensler, and I think he has a quote I really buy in. What he mentioned is, compliance is not going anywhere, and if you can, fund managers can actually apply AI to actually turn that compliance burden into something easy, saving time for them, that will turn that into, let's say, edge for them. But I think, more importantly, it's more about, hey, how do you connecting all the siloed, fragmented tools, data into a unified intelligent system? So I think that's where we're building, connecting front office research to trade ops, operations, portfolio management. You right now the industry has too much siloed tools. If we can aggregate all that together in one place, I think that will be tremendous value for fund managers.
So when it comes to the buy side, there's really the front office, i.e. the investment management and decision making, and the middle office, i.e. the operations, post-trade operations. If we start at the front office, how can AI be used in the investment management process?
Yeah, well, that's I think where a lot of the most cases are happening, because end of the day, if we like you mentioned, if we break it down, it's boiled down to how does AI help our clients, the fund managers, making money and saving money. And of course, making money is always more important. So we have a lot of research you know agent that actually related to that what we call alpha generation agents. So when we break that down, I think it's come down to three. One is basic investment research, aggregating all the information together, exploring, researches and data that helps them to basic gathering information, investment insights easily, build up their perspective and edge. So that's on the investment side. But equally important, I think oftentimes people undervalue the value is actually alpha sizing or position sizing. So we also developed a unique technology called voice scoring. So that's basically where we help managers to look into their trade ideas, understand, better deep dive into the convictions, the logics, check out, how they can better help them with, a position sizing. And the last part, of course, is actually when you have built the position, how do you do portfolio management, managing the risk? So I think, again, investment research, idea generation, position sizing, and portfolio management. So our agents helping on this three different levels.
And if we look at the research agent, what exactly is it doing and how is it helping on the research side?
Well, I can give you a few cases. We actually work with different hedge funds, and our central product is basically a unified research hub. We found the problem is our PMs analysts are overloaded by thousands of emails and a lot of investment research memos. They have to log into 10 different portals to get the information what they want. So now what we're doing is we're building a unified central research hub. We're starting to talking with the third-party researchers and the big banks to aggregate all this information in one place. So now our clients can come into our platform, ask a question. Hey, let's say, what is the consensus on next FOMC meeting? So they got a unified idea about, hey, where market's moving, what's the consensus? They got that insights. So that's on one use case in terms of gathering textual data. And also, what we are building is, on the quantitative side, our agent not only can handle textual data, we can also handle quantitative data, which I can share a little bit more.
Yes, please do. So is that around aggregating analyst estimates, numbers, etc., or how does that work then?
Yeah, so like gathering analyst estimates is a very popular use case, and the process 10K 10Qs are kind of like a popular use cases in the equity world. For us, what we're actually doing a lot more is actually in the multi-strat or multi-asset. We focus a lot on the global macro side of it and the credit side of it.
And then how would your agents be different to the general LLMs? What's to stop an analyst asking ChatGPT, aggregate these analyst estimates or read these 10Qs, 10Ks, and give me the sentiment for XYZ? What's different and unique to your side?
This is a great question. I think, again, we have to break that down into two parts. One is textual data, one is quantitative data. This is a very important question. So in terms of textual data, Menos AI have developed our unique technology. What we call it is actually agentic RAG, retrieval augmented generation. So oftentimes what, basically if you ask a ChatGPT a question, what it does is, through like large language model, statistically, predict what's the words to best answer that question. So inherently, there's a lot of hallucination to it. It's unexplainable. It's a black box. So we've developed a technology, what we call agentic RAG. So basically, what we do is first we convert all the unstructured textual data into structured, explorable, research-ready data, structured data. They use AI agents, writing code to explore all those data. So in that way, all the process is deterministic. It's explainable and no hallucination. And in the quantitative side, which we just mentioned, we're not just only wangling around textual data. We're also doing a lot of basically quantitative data. So on that side, what we're doing is we're using large language model to understanding the question, and then using agent to write code, basically get into the data, calling the data to actually answer the question, to operate. So it's basically context plus tool function calling. I'll give you an example. So this is actually a recent case that internally we're exploring. So we are having a fantastic year, right? This year, U.S. equity market has been very, very volatile. And if you actually look into the history, in the past 100 years, there's only 10 times the first 10 months of the year that the equity market S&P 500 returned more than 10%. And November was a major down month. So our question is like, okay, in this case, what happens in December? You can throw that question actually into basically major models like Gemini 3, ChatGPT, or whatever. And then what a large language model does is basically find search articles and find things relevant and present to you, but it's not complete. What our agent does is understanding the question, the setting, the purpose, then go pulling all the required data to actually compile that research analysis to answer that question. So that's, I think, a core difference between us and the large language model. So we're purposely built for investment functions.
And then from an explainability point of view, does the response it gives you cite the sources that it's pulled from?
Yeah, not only cite the sources. So as I mentioned, our agent actually write the code, pull the data. So in all that process, basically we can, we actually made our platform to be collaborative friendly. You can actually come in to say, interact with that process. That's the part of human robot kind of an interaction.
If you're enjoying the Fund AI pod, the best way to support the show is simple. Hit subscribe. It really helps a new channel like this grow, and it allows us to attract even more interesting guests from across the funds industry. Head to www.thefundaipod.com to catch past episodes, nominate future guests, or explore ways that we can work together, whether that's consulting, sponsorship, speaking, or collaboration. Now back to the episode. Let's touch on that human robot or human AI, because it's something that I've looked through on a few papers. And ultimately, the idea has been that AI will not replace humans, it will augment them. So what's your view on augmented versus replacement when it comes to AI and the investment management decision process?
Yeah, well, I think that goes back to our early discussion, right? AI can only scale people. It's not going to create something that people cannot do. So I think I fully agree with you. And I think another version of that is say, hey, automotive didn't replace, basically the horse wagon or people who drive the horse wagon. It's people who drive the automotive, replace the people who drive, horse wagon, right? So it's all about the tool. So I think, fortunately for people like us in the industry has already know, what's the real problem. I think AI can really help to, scale it up. For people who new to the area, they still need to catch up with, what's the real assets of the business. So I think that's where it's creating, troubles for new graduates, but at the same time, helping them to learn things more faster than we used to do, right?
As you described some of those research solutions that you've created, you mentioned voice scoring. Could you elaborate more on what that is and how it works?
Sure, yeah. Voice scoring is one of our lead horse technology and agent that we developed with our hedge fund and asset manager client. So what it does is basically solves a problem like, hey, how do we better distinguish skill and the luck in our research process? So historically, it's actually very hard because let's say I'm a research analyst. I've built up my research or conviction on certain trade, and sometimes you will have P&L. If you only measure research or your kind of a trading through P&L, you will miss the part that, hey, there are different factors will come in affected P&L. But the research part, we're leveraging large language model, purely looking at the logics, the reasoning, the conviction. Is there any behavior patterns to help quantify the research skills or PM trading skills in that way? So as it famously said, if you cannot measure it, you cannot manage it. So now we're helping hedge fund managers to better evaluating their research skills with voice score.
Effectively differentiating between skill and luck.
Correct. Yes. Perfectly said. Thank you.
So you mentioned two areas, research and then operations was the other side. Is that correct?
Yes.
And I liked the quote that you said, and it's something similar before where I've said managers are not paid to be the best reconcile, they're paid to generate alpha. So how are you able to help these managers with operational efficiency or operational alpha?
Yeah. Well, I think in terms of operational alpha, that's where, as I mentioned previously, save money and make money, right? So that's basically the two way you can help your clients. So, alpha agents help make money. Now we're getting into the save money part. I think essentially it comes down to very simple principle: automating the routine works that are manual, repetitive. Now we're basically using AI agent to automate that, so people can focus on more strategic, important things. And then what we love to tell our clients, and actually our clients told us about this: hey, your agents really help us spend less time wrangling the data, but more time do real analysis and the decision making. So that's how on the operational front. I'll give you a few examples. For example, as a quant, we spend so much time just cleaning the data and kind of building same statistical tests on data before all that data can enter into real kind of alpha model building process. So now we're using AI to automate a lot of that process.
Interesting. And what would be some of the most commonly requested operational agents that you've seen deployed or requested by prospects or clients?
Yeah, I think very interesting question. I think again, trade reconciliation surprisingly is still a thing, right? So basically, if manager is trading a lot of OTC products, they're dealing with all different banks OMS system, and then the trade has to be reconciled with their internal system. They always cause different problems, and there's a lot of legacy systems still using email or things like that. It requires human intervention. Now AI can come in and help with that, and that's one. Another part is actually compliance, as I mentioned previously, pre-trade compliance, post-trade compliance, and the risk guideline monitoring. So hey, have this IMA or this guideline we need to monitor. So in the past, we need to eyeball through all the reports, making sure things are all right. Now we can use AI to automate the entire process. When a risk exposure is breached, AI can risk alert directly mention that. So risk that to the portfolio management team and to the PM.
And I'd love to know the state of operational agents today and maybe where they could go in the future. So if we were to take trade matching or a reconciliation agent, as you sort of mentioned there, obviously they can do the recs, match them with the different attributes, spit out the reports. Are they at the stage yet where you could say they can look at the trend analysis and give recommendations? And what I mean is, hey, 30% of your breaks are coming from commissions with this PB. That might indicate that your commission table on your OMS is out of date. Go update that with that prime broker.
Right. Well, I think those are great use case examples. This is where I think human expertise comes in, and that we can build out the agent, give agent the knowledge, instructions to monitoring this type of opportunities. Things like, hey, optimize my, let's say, the short borrowing interest among different PBs, things like that. So I think again, it's as I mentioned previously, as far as some human can do it, clearly articulate the process, the objective function. Now we can build AI agents to actually fulfill that ambition or that goal.
And that's part of the story or the sale of AI is phase one's often efficiency, do a lot of the repetitive tasks, and now frees up the human to look at insights and value added features or functions. So this podcast is all about sharing real life AI use cases to inspire others around adoption of AI. So could you share an example where AI or an agent has reduced time to insight or improved the decision-making process in a fund setting?
Sure. Yeah. Well, we always love to share, what our agents are really making a difference. I think, as I mentioned previously, what we're building is from fragmented, tools to a unified intelligence hub. We're connecting the research and the portfolio management in one place. So I'll give a quick example. So, for example, let's say our research agents, basically listen to all the investment memos internally and the news externally, and identify, hey, XYZ company is actually having a cash issue, which may cause issue to their capability of paying back the debt, raising their kind of credit risk. So in that case, what happens is basically what can help is from a total portfolio view, help managers. The natural reaction in that case, if it's a complicated fund, managers or CIO risk manager want to ask, hey, what is our total portfolio exposure to that issuer, right? That might including, let's say, different bond, different even let's say equity or equity derivatives or different type of things. So in the old time, basically our the process would be, hey, you need to run analysis from different softwares, equities, bond, to actually gather a report. So now what we can do is you can basically ask that question, our research agent monitoring, identifying that question issue about this, situation about the issuer, and then our agent can actually dig into the portfolio and very quickly gather together a comprehensive report on the total portfolio exposure to that issuer, a different position level, to help managers understanding hey, where their positions are, what options they could take, and even help them with factor analysis or scenario analysis. It used to probably cost hours or days to complete such task in a large fund, but now we are turning that into seconds.
So I love that you've got real life AI use cases in the investment process today. But if we were to look out 2-3 years, and especially if we think about how quickly AI is evolving and enhancing, what does the future of investment management leveraging AI look like 2 to 3 years from now?
Yeah, I think AI will be powering a paradigm shift in terms of how we're looking at investment management, portfolio management, and risk analysis and portfolio management. So if you look at it today, the main infrastructure or methodology, let's say, the factor analysis, no matter it's Barra factor or axioma factor or other MSCI tools, in terms of portfolio management and risk analytics, all those models have a few drawbacks. One is it's pure statistical model, meaning that it's always looking at the historical data. It's backward looking, not forward looking. However, what happens is in today's world, the market shifts rapidly, but the parameters of those model does not shift as the market shift. So that creates a lot of issue to that. Another part is all those statistical models, they oftentimes have issues like overfitting or sparse correlation and a lack of kind of explainability. So for example, you might ask, say, hey, I want to hedge this gold mining company, right? And you run a factor model, it gives you a biotech firm, right? So because of its perfectly, let's say, has some statistical correlation, but it doesn't add explainability. At Menos AI, what we're doing, we're developing something called narrative factor, where we believe, because large language model has the capability of parsing and understanding context and the logics, now we can actually adding all that part back into the analysis to the statistical model today. So I think in 3 and 5 years, if we look that far, I think that will be the major change to the entire funding cornerstone of financial portfolio analytics.
William, I appreciate your time. Menos AI sounds like it's a fascinating tool that managers can use to help generate alpha, save costs. Where can our audience members find out more about Menos?
Yeah, please follow us on LinkedIn. We're primarily on LinkedIn, Menos AI, and you can also find me on LinkedIn, William Junchen. Yes.
Excellent. And is there a website that people can go to find out about the product?
Yes, please visit us at menosai.com.
Well, William, I appreciate taking the time today to share more about your journey and your product. Really appreciate coming on the pod. Thanks.
Thank you.
If your fund or firm still runs critical processes on Excel, you're not alone. But the opportunity isn't just AI. It's unlocking the Microsoft tools you already pay for, like Power BI and Power Automate, to eliminate manual work and reduce key man risk. At 𝐻𝐻𝐿, we know funds, we know Microsoft, we know AI, and we move fast. Book a 1-hour sprint audit at 𝐻𝐻𝐿.io, and we'll identify 3 quick AI or automation wins to build immediate momentum for your firm.